Hey, what is going on, Bulls and Bears? It is Sunday, April 10th, 2022. We have a nice report for you today, an economic update here. We're going to start with the dehumanization of what many companies are doing, getting rid of humans. And for example, Chipotle has really stepped up their replace humans game. And we're going to get into that and what's happening with the robots at Chipotle restaurants. And as more people refuse to work, and there's still a lot of people that refuse to work, and a lot of people don't have to work. Remember, we still have the rent moratoriums in many cities right now. And how many people are just sitting out of the labor force right now because they don't have to pay their rent? And we see cities like LA, here in San Diego, continuing to expand or extend these eviction moratoriums. And simply put, a lot of people don't have the fire lit under them to go out and get a job when they don't have to and they don't have to pay rent. There's other factors as well, but I think that's a big part of it. So we're going to talk about that. World de-dollarization accelerates. What's that going to mean for the world reserve currency known as the dollar? What's that going to mean for your purchasing power? We're going to talk about that. Also, we have a short trading week. We have Good Friday coming up this week. The worst price increases in decades continues to worsen. And we're going to talk about how the official number, the government number, the CPI, how it drastically understates the increase in the cost of living. For example, rents are up 17%. We're going to show you the huge disconnect between the CPI and the real number, the real cost of living. All right, so let's go ahead and get into it, starting with Chipotle stepping up its replace humans game. Now, this report comes out of People, and we see this trend now with restaurants and retailers going more towards automation, self-checkouts, and overall just less humans needed. Now we have Chippy the robot making tortilla chips at Chipotle, and how much longer is it going to be before we have the robots that scoop up the chicken or the steak for the burrito bowls and stuff like that? Let's take a quick look of this at this robot in action. And as more people cry and whine about a higher minimum wage, well, pretty soon it's going to be no wage because robots like Chippy are going to be cutting into your job availability. And this is just one of the problems with the high cost of living, right? With the high cost of living, you always have people there demanding higher and higher wages. And what does that do? That incentivizes many companies to go towards more robotics and less humans. Robots and Chippy here and robots, they're not going to be demanding a higher minimum wage. And if robots do start demanding higher minimum wage, that's going to be really weird to see that. All right, so expect this to continue. And when all these people that are getting free rent right now decide they need to go back to work, they might have a much harder time finding a job. Now, right now, a lot of fast food places are having a very difficult time keeping people on board and keeping their staff. And another part of it is just that a lot of younger people are just checked out. They're checked out of the labor force. They look at home prices. They look at rents. They're choosing to stay home. We showed you a report a few months ago about how almost half of millennials are still living at home. And it's only going to worsen as the cost of living continues to get higher. Now let's talk about this de-dollarization and how it may impact this here. We see what's happening over in Russia and how Russia is selling oil now outside of the dollar, demanding rubles, even hard assets, including gold. And all the trading partners of Russia, remember, Russia is the third largest oil producer in the world. Now, before this whole event situation over in Europe there with the war, with the invasion, as some would call it, before this, the US dollar was about 60% of world trade. So all trading done globally was done in about 60% was dollars. Now, after this situation finally plays through with what's happening over in Russia, it could be less than 60%, and actually it might be less than 50%. So the dollar might be, well, we know it's on its way out, but this acceleration is only going to hurt our purchasing power here in the US, as there's going to be even lesser demand for dollars. So add on top of that all of the other inflationary factors Now you have this de-dollarization accelerating, and it could mean even worse things as far as the cost of living and how far your dollar, as far as purchasing power, how far that's going to go. So please let me know what you think down in comments. But I see more danger ahead for the cost of living with this de-dollarization. All right. Also, it's a short trading week for those of you that are in the markets. Keep in mind, Good Friday markets will be closed. I myself, I try to do some trades, a few trades each week. And for those of you that are over on the Patreon platform that support me over there, I talk about more of my trades in greater detail. So if you're interested, just head on over there. I'll put a link down below this video. Next, the worst price increases in decades continues, but it's much worse than they're telling us. Now, for those of you that are newer on this channel, let's go over this because I've talked about this a few times here and there, but I still see people down in comments kind of questioning, why we're saying that the official numbers are incorrect. Well, here's one example. Rents are up over 17% year over year. Let's take a look at a recent article about this. And Apartment List just put this out here recently. Looks like March 28th article, a report here. Rents up over 17% year over year. And that's just the average. In some cities, it's much higher than 17%. Some lower, but some much higher than that. All right, but let's just go off of the average, 17%. Now look at the official inflation number, the CPI number. And this was put out over at Yahoo Finance, and it outlines it here, the worst consumer price increases in nearly 40 years. We look to the right here, it says the number, which is the official number, CPI, is 7.9%. Well, we know just looking at rents, that's not true. And ask anyone if they're only paying 7.9% or just under 8% increase in anything. Look at the price of gas, nearly doubled in some areas. So the CPI number, the methodology has been changed many times over the past few decades. And in fact, if you look at the real cost of living, when you factor in the true cost of housing, energy, and more, which is outside of the basket of goods that's looked at as far as CPI goes, we're actually even worse than a 40-year high. We look here to the early 80s, where we saw the CPI of over close to 15%. Well, I think we'd be the worst in 50 or 60 years if you look at the real cost of living that most people, including a lot of people here, probably most of you on this channel, probably most of you just yourself see that it's way worse than just under 8% cost of living. If you're seeing less than 8% cost of living, please let us know down in the comments where you're at. Maybe you're out in Stickville, Missouri somewhere, and I'm not bashing anybody living out in the country. I grew up on a farm in a rural part of Michigan. But yeah, maybe there are some places that are still seeing very, very low cost of living. Maybe your gas prices aren't $5 and something almost $6 a gallon like they are here in California. But I really doubt it's 8%. If it is, please let me know down in comments and let me know either way, what you're seeing as far as the cost of living. But when you look at the real numbers, it's actually much worse than what they're saying here. Instead of being the highest in 40 years, as far as I could see, it's the worst in about 50 or 60 years. And it's only looking to get much worse. So that's going to be the report for today, people. Keep stacking. One way to fight back against this inflationary situation is silver. The price of silver is being suppressed on the paper markets. They're trading a derivative of the real item, the real physical silver. They're doing that by doing naked shorting and other ways of suppressing the price, but they can only suppress the price on paper. And we already see the detachment and the disconnect between the paper price of silver and the real price. Good luck trying to get an ounce of silver for less than $30 when the paper price is closer to $25. So there's already a pretty big disconnect, but the more you keep stacking silver, the more you keep fighting back against this artificial suppression of certain assets, including silver. And that's the way you can expose this manipulation and fight back against this system. And link down below also to those of you that want to stack silver. I get my silver from SD Bullion. It's a great place to buy in my opinion. Link down below. You also help out the channel a little bit by buying it through that link. So thanks everybody for being here. Keep stacking, keep fighting back. And we hope to see you back here very, very soon. Please give us a thumbs up if you like what we talk about. And please make sure that you are subscribed. Help keep this channel alive by subscribing. and it really helps out. Thanks everybody so much. Bye for now. Peace.